All right, so you're curious what is happening in the Phoenix, Arizona housing market. I'm gonna give you the lowdown on the market ending for May 2023. Welcome, I'm Heidi Littleton, realtor with My Home Group Real Estate, serving the Metro Phoenix area. If you wanna know everything there is about Phoenix living and real estate, then go ahead and subscribe below and tap the bell for notifications. Let's go ahead and get started at looking at the Greater Phoenix market update for May 2023. One of the things that I always talk about with anybody who's looking at the housing market and talking to me about headlines and the things that they see on the news is I always ask them is what is the data behind that? Oftentimes those headlines that you see in the papers or on the news is national headlines. So that data reflects differently than what it does here in Arizona, I'm finding. And so for me, the thing that I use the most is the Cromford Market Index to help me better understand what does our local market look like. What I love about this is they are constantly updating it. I can get daily updates to see where is our market going and heading. I also really like this because it is more of a leading indicator of where is our market today and where is it going compared to those lagging indicators such as the CPI or the Case-Shiller. And we'll talk a little bit later about Case-Shiller. So how the Cromford Market Index works is you have 100 in the middle. That's kind of the standard. Anything over 100 is a seller's market, or as I prefer to call it, an appreciating market. Anything under 100 is considered a buyer's market or potentially a depreciating market. So let's take a look at where Phoenix was for May 2023. So you can see here, I pulled this on June 5th, but you can see our market index is 162. So that puts us into a seller's market. You can see supply is 52.1. So we are significantly below our demand. Where our supply should be, and you can see the demand there, 84.5. So we're slightly below on demand. Again, I think a lot of that has to do with the fluctuating interest rates and just some uncertainty around there. So taking a look at all of the major cities, everything is in a seller's market currently, with the exception of Buckeye. Buckeye is still in a buyer's market. Maricopa is in kind of a weak seller's market at 103. And so typically what happens is on those outskirts cities like Maricopa, Buckeye, Casa Grande's not on here because it's a different county, but those types of places are typically the first to go into a buyer's market and the last ones to come out. So I would imagine over the next couple of months, we'll see Buckeye come out of the buyer's market as well. But you can see Fountain Hills and Cave Creek are on fire currently. They've had the biggest change since last month, 22% change. So if you're looking to buy in any of those areas, just keep in mind, it is a hot market right there currently. Now let's talk about our 3-month moving average. And this is in relation to the Case-Shiller report. So there is a new one that is coming out at the end of June. Now when that comes out, we're gonna see all kinds of negative headlines again, right? Like, oh my gosh, we're still negative. It's not looking good. Doom and gloom, everything's crashing, right? Keep in mind that reporting is going to show us April. It's a 3-month moving average, and it's always late to come out. By the time it comes out, we are well into June. So yes, and you can tell people you have a crystal ball. You can say, hey, guess what? It's gonna report another month of increase and another year-over-year decline. Yay! But we already knew that because that reporting is so far behind. So when that comes out, keep in mind, it will be reporting for April. And this is a great representation here, right? So Case-Shiller index is way behind. You can see them lagging in the back compared to when I give you the monthly averages. That's what's happening as of the data that we have. It's current, it's up to date. I can even pull data as of today. So we want to make sure that when we're reviewing those headlines that we're really being mindful about, okay, when is that reporting actually from? And where is a source that I can go to that has the up-to-date today information. We don't really want to look at what's happened in the past. It's done and over with. We want to look at where we are today and where the future is going to be. All right, so looking at our average sales per square foot monthly average, we're looking at in May, we're at $284.96. So that's about a 6.9% year over year decline. Again, year over year, we knew our peak was in May 2022 and our low was in December of 2022. So May to December, we lost 12.3%. However, December to May so far, in terms of price per square foot average, we have recovered 6.2% already. So that is over half, about half of what we'd already lost. And then looking at our median sales price for May ended at $435,000. Again, our year over year appreciation is negative currently, but I would estimate that by Q3, that's going to start to get flat or positive, hopefully positive. But you can see, again, we are trending upwards. So for those that have been kind of talking about the sky is falling, we're going to be having a crash and things, the data, just you can see it here, is not supporting that. We are slowly trending up. Now the thing about this trend, and this is actually a good thing, we are trending more on track with 2019 than 2020 and 2021 and 2022. Well, 2020 and 2021. So kind of those, what we're calling the unicorn years, right? The frenzy year, if anybody remembers those. So we're on track for kind of that pre-COVID pandemic housing where we should be. So I always love to share this. I think there's, again, a lot of fear when we see that year over year decline. I know I'm particularly one of them, but I like to show what this chart is because I always preach that buying a home is a long-term investment. So when you call me up and you bought your house last year and you say, oh no, I'm not gonna, like, my house is depreciating, I don't have anything, like, what are we gonna do? My question is, do you plan on moving right now? If the answer is no, let's take a breath and look at what the data is telling us. So you can see if you bought your house 2 years ago, you still have 13.5% equity. 3 years ago, 58%. 4 years ago, almost 66%. So I have clients who are thinking about moving who have bought their house 3 years ago. They have more than enough equity. I pulled their net sheet and they are just fine and happy with where the equity that they have. Now, if you're in my situation, I bought in April of 2022, right? So I'm looking at this going, oh my gosh, like this sucks, right? But the reality is I don't plan on moving anytime soon. So I'm gonna hold out, keep watching my numbers to make sure that things are ticking upwards. And as I said, I truly believe that this year over year is going to be flat or positive come Q3. So hopefully by the end of the year, this is going to keep going up. So that's why it's important to look at all of the bigger picture instead of kind of looking at those headlines. And I love the statistic, 68% of Greater Phoenix active resale listings were purchased more than 2 years ago. So again, unless you're an investor or a flipper, yes, if you're an investor and a flipper and you're seeing this, it's a little bit worrisome. Hopefully you didn't buy the house sometime at the end of 2022. But yeah, this could be a little bit concerning if you bought kind of during this down portion here. But again, you want to have that long-term hold. We can see here the appreciation since December. Again, December was our low, remember, at 415,000. Was our median price point. Now we're at 435, but you can see everything is ticking upwards. Luxury right now is doing phenomenal. They actually had I believe their second best year. Crazy what's happening in luxury right now. But again, they're less sensitive to all of the fluctuations in interest rates. So they're seeing great sales over there currently. But you can see we're ticking upwards across the board. Again, December to May, you can see the square footage prices here and the change since December. So hopefully this gives you a little bit of sense of relief that like we are ticking upwards. We're not crashing. We're not declining. We're looking good. And we're not having that frenzied increase, right? That we saw. We're having kind of nice, steady, slow increases, which is great for everybody. Long-term rentals, you can see here the list price on average was around $2,200 and they were closing at around $2,175. Again, we are seeing that uptick again of rental costs. So just keep that in mind when you're trying to make a decision between buying and renting. We are starting to tick up on the rental costs. And we are also seeing a little bit of a shortage of some rentals as well. So keep that in mind as well. So FHA loans, I really want to touch on this because we're seeing it more and more. In January, FHA loan limit increased to $530,000. So more purchase power for those going with an FHA loan. Then in March, the FHA mortgage insurance premium was reduced, so saving literally hundreds of dollars every month for people. And what overall, typically FHA 30-year fixed rates are lower than conventional rates. And then add to that, we are seeing seller paid closing costs are higher with FHA. So you can use up to 6% of the sales price compared to 3% with conventional rates. So what we're seeing is more and more people are gravitating towards those FHA loans. And you're seeing that here. Let me move myself out of the way here. You're seeing that here. So kind of that lower mortgage insurance premium went into effect in March, and you're kind of seeing that uptick here. Now 24% is using of buyers are under 500,000 are using that FHA loan. And look at that in comparison over here to our early 2022 at only 11%. During our high, only 11%. And I saw that with my own buyers. We were being beat out by cash, by conventional, who could put far more money down. It was a struggle for my FHA buyers during that frenzied time. So it's good to see that that's upticking. We want that to be more normal. And then the other thing that's really interesting is that we're seeing an uptick in the 500 to 600 range. Again, that has to do with the increase to 530,000 for the FHA maximum. So again, you can see back here in May of 2022, we only had 1%. 1% of 500 to 600 was FHA buyers compared to now that 11%. The other thing that I'm seeing as well is that more people, even if they qualify for conventional, they're starting to use FHA because you have those lower rates, because you have the lower mortgage insurance. It's helping to reduce their payments. And it's just making more financial sense for them to go FHA versus conventional. All right, before we talk about closed sales, if you're finding this video helpful and want to be the first to stay informed of where the Phoenix housing market is going, go ahead and give a thumbs up to this video and subscribe. I really greatly appreciate it. All right, let's talk about closed sales. You see all these headlines, existing home sales down. Where are we down? I hear it too from people, I'm slow, the market's slow, what's happening? Sometimes I feel it too. I think part of it has to do with the frenzy, right? We were all so incredibly busy with that frenzy, and now this slowdown, we're all like, oh my gosh, it's so slow, what's going on? I don't have any business. But let's take a look at if that's really true. So one of the things that's not being taken into consideration in some of these headlines is the working days. You can see here that there's different amounts of working days. And some of these, for example, February to March, there's almost 4 more working days. So taking into consideration that monthly fluctuation in working days, let's look at closed sales. All right, if we were to just go based off of calendar, right? Just straight calendar, not worried about the number of days per month. We'd see, okay, January, we were up, February up, March up. Okay, wait, March to April down. Oh my gosh, I'm panicking, right? In reality, it's not as drastic as you would think. And again, that's taking into consideration working days. So you can actually see we have consistently been trending upward throughout the whole year. So while it might feel slower, right, the fact is our closed sales are slowly trending upwards. They might not be at a frenzied pace like we've seen in the past, but they are chugging away upward. New listings. Oh, this is the rough part, the new listings. So you can see here, we are significantly below where we were in 2022. So May closed out at 6,863 new listings. We do have some in coming soon. Coming soon status, for those who don't know, they're not active yet. It's just saying, hey, in the next few weeks, it's going to be coming on the market. It's a great way to be able to market, find maybe a good deal. It's actually how I found my current house. It was in coming soon status and jumped on it. So you can see that's 39% lower than it was last May. And it is actually the lowest new listing count in over 23 years. People just aren't currently moving. I think a lot, as you saw, a lot of those people have great interest rates and they don't have a need to move. It's kind of this weird cycle. With higher interest rates, you don't want to move and get that higher payment, and there's not very many houses on the market to choose from, and so people aren't moving. Add to that, and I'll talk a little bit about this in a bit, but we have a shortage of new builds. People think foreclosures are coming. I can't reiterate this enough. They're not coming. But yeah, our new listings are a struggle currently. We can see here our weekly price reductions. About 11.6% had price reductions, with the median price reduction being about $10,000. But again, you can see that from December, you could kind of see here, October down to December, we had far less price reductions, and now we're kind of stabilizing out for our price reductions. And again, price reductions aren't rising, so this does indicate less pressure on sellers due to that low supply. So because we do have a low supply, there's typically more buyers for that home than there were in the past, and so homes are going a little bit quicker, and we'll see that soon in the number of days on market. So they're not having to reduce their prices as much compared to January, February, when kind of the market wasn't looking as good. So our median days on market, again, you can see in January when kind of those reductions were happening more often, our days on market were 56, and we're currently down to 21. So it's if your house is taking longer than 21 days, you may want to talk with your agent about, hey, what's happening? What's the pricing look like? Because we've come down quite a bit. So, which is great news for sellers. Closing costs. We talked a little bit about closing costs and FHA. Again, if you were around for the frenzy, closing costs were almost non-existent during that time frame. In fact, you were probably having to give up your firstborn kid. I kept joking when we were looking with some clients. I was pregnant at the time. I was like, I'm probably going to have to give away my baby to help get my buyers into a house. But you can see 40% of listings did have some sort of closing cost involved in May compared to January. So it's come down a little bit, but we're kind of trending around. Again, you can see 2019, we're trending where we were 2019. So taking out those unicorn years, we're on track with where we have been in the past. And those sellers paid closing costs in May were around $8,500. Again, you can see that's coming down from January, so everything's kind of trending down a little bit, again, likely due to being in a seller's market again versus that buyer's market. So yeah, so if you are a seller, these are just kind of things to keep in mind and to budget. It's something I always talk to my sellers about is, hey, these are likely going to be something that we is asked for in an offer. How do we prepare for that portion? And you can just see here, kind of based off of the price point, the number of offers that included concessions and the average price. So you can see between that 300, 500 is where you see the biggest chunk of seller paid closing costs, and those range between 8,000 and 9,500. And then 500 to a million, you're seeing around $10,000. All right, so this next part is where we were hoping to have more inventory come in and kind of help alleviate that supply shortage, but it's not looking good. And this is in single family new construction. So this happens January to April of every year, so you can kind of see all of the numbers here. We are down 49% this year compared to last year. That is a significant drop. Basically, this means not as many houses are going to be built. I think a lot of this had to do, again, with interest rates and just being overly cautious. So we're going to have to see how this plays out. However, new home sales have been trending upwards nicely this year. It's kind of, we're having much more home sales, new construction home sales than resales some months. So it's trending upwards, but there's going to be a time where that definitely starts to slow down because they don't have the permits. So we'll have to kind of keep an eye on where that goes throughout the rest of this year. But we're definitely not getting more inventory from new home sales. So we're going to be in a seller's market for some time here until we figure out where are we getting more homes from. So hopefully if rates come down, when they come down, more people will be more apt to kind of put their homes up on the market and hopefully increase some of our supply. This is just an overview. If you ever want to see this, go ahead and feel free to message me. But a couple of things I want to point out in here is our listing success rate has been trending upwards. We're at 83.8%, which is right on track of where we need to be, which is great. So if you're a seller, curious if your home is going to sell, yes, chances are highly likely yes. And you can see those active listings up top there, and just kind of where we don't have very many. It's not as bad as 2 years ago, but we definitely need more, and we're gonna have to see where they come from. So go ahead, that's all I have for today. Go ahead and let me know in the comments if you have any questions about the Phoenix housing market, if you have in a particular area or price point, if you're wanting more information about buying or selling, and be sure to check out my video about where we are 1 year later from our high in May 2022 and 6 months later of our low in December 2022. Until then, happy house hunting.